Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing First Majestic Silver stock so we can determine if it's a buy or a sell. First Majestic Silver is a silver and gold mining company that operates in Mexico and the US. It has 4 producing mines under its control, 3 in Mexico and 1 in the US. The company is headquartered in Vancouver, British Columbia, Canada, and was founded in 2002. Let's get started with the model. This is a small cap company, 1.7 billion market cap. They're trading at $6.28 a share, and they have 271 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They did have positive free cash flow in 2019, but it just gets worse after that. 2020 negative 35 million, 2021 negative 120 million, and 2022 negative 200 million. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that's only positive in 2020, negative in the other years. Revenue is a sales for the company, and that looks pretty good. It goes from 369 million to 627 million. They recently released their first quarter earnings. In the first quarter of 2023, revenue of 157 million, almost exactly first quarter of 2022. Let me show you a breakdown of this number so you know what it is. Of the 157 million of revenue, 61 million from the San Dimas mine in Mexico. Remember San Dimas from Bill and Ted's Excellent Adventure? They lived in San Dimas, California. Santa Elena is 49 million. La Encantada is 18.8 million. And the mine in the US, the Jerritt Canyon mine, 24 million. That's down a lot from 2022. The others category represents coins and bullion sales. That was 3.8 million. Look how inefficient the mine in the United States is. The cost of sales is 46 million. And the revenue is 24 million. If you include depreciation, they lost $31 million on the mine in the United States. The 3 in Mexico were all profitable, 8.9 million, 13 million, and 2.4 million. They also spent the most in CapEx on the mine in the US, almost 19 million. Total CapEx spend was 47 million. Even though the name of the company is silver, 61% of their revenue is in gold, 39% in silver. Same exact breakdown last year, 39% and 61%. This is a cool chart that was in their first quarter financials. It shows you revenue by quarter going back to the second quarter of 2021. Their revenue peaked in the fourth quarter of 2021 at over 200 million. I'm sure the spot price of silver and gold were a lot higher in the fourth quarter of 2021 compared to the third quarter. In the last 2 quarters, they were running at an operating loss. Their best quarter was in the fourth quarter of 2021. They had an operating gain of 40 million, but they had a net loss that year after taxes. They did have a net gain in the second quarter of 2021 and the first quarter of 2022, but every other quarter was negative. The worst quarter was the most recent one, a net loss of 100 million, a loss of 37 cents a share. Let's go back to the income statement. Cost of revenue is 124 million. Then you have depreciation, amortization, and depletion, 34 million. The direct expenses for the mines is 163 million, so they had an operating loss of 6.4 million. There's also other expenses like admin expenses, the salary for the executives. They had a big impairment, 125 million. That's why their net income looks so bad, is because of this big impairment. If you strip that out, it's only about $25 million loss, which is bad, but not nearly as bad as 144 million. They spent 5.6 million of interest on their debt. Last year was 4.6 million. They had a gain on their income taxes, a gain of 46 million. So their income after taxes is negative 100 million, which is a loss of 37 cents a share. And they're adding shares. Last year they had 260 million, now they have 274 million. Let's look at the capital structure. 1.4 billion of equity, 248 million of debt. They're 85% equity, 15% debt. Their net debt is 62 million. That means they have $186 million of cash on their balance sheet. I gave them a whack of 10%, and that's the discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $2.8 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $2.4 billion. We divide that by 271 million shares. And we get a calculated stock price of $8.81. They're trading at $6.28, so they're trading at a 29% discount. It's a buy according to the model. Simply Wall Street is on a different planet. They're at $57 a share. They say the stock is 89% undervalued. 5 analysts priced this stock, and the average price target is $7.79. The low is $6.31. The high is $10. 3 analysts priced this stock, and the average price target is $9. They say the stock is 40% undervalued. This is where the stock has been trading since it IPO'd. It looks like it's pretty similar to the other silver stocks we looked at. It got really low at the end of 2008. Looks like it might have been below $1. Then it blew up, almost hitting $25 in the beginning of 2011. It never got that high again. It fell to $2.50 in the beginning of 2016, then shot up to about $18. When COVID hit, it got down to $5, then more than tripled to about $18. Now it looks like it's coming way back down. Ever since this peak in the beginning of 2021, it's only gone down. A bright spot is they did start paying a dividend in mid-2021. This bottom chart plots their quarterly revenue since 2010, and the top chart is their stock price since 2010. Not much of a pattern. With some stocks, you do see a pattern where the stock price moves with their revenue. This stock, it really doesn't have much of a pattern. This red line is the price of silver since 2007, and the blue line is the price of First Majestic. They seem to be pretty correlated. They move together really well. But it is odd that this stock is always below the price of silver. It never beat the price of silver at any point. So you would have been much better off purchasing the ticker SLV. That's an ETF. That tracks the price of silver. They pay a really tiny dividend. It's below 1 cent. This is rounded. I think it's 0.006 cents. That's a yield of 0.4%. There are 5 companies in the same industry as First Majestic. And if First Majestic has a number in red, they're worse than the median. If they have a number in blue, they're better. Of the 5 companies, they're right in the middle in CapEx spend. All the companies on this list have a really low debt to equity ratio. Of the 3 companies that pay a dividend, they pay the smallest dividend. They're second worst in free cash flow. They're the second largest company on this list. Their price to book is at the median. We can't look at their PE or price to free cash flow. Their price to sales is worse than the median average, and their revenue is worse than the median average. But in the past 5 years, this company and Fortuna have a 21% annual revenue growth rate, which means they're tied for the highest of the 5 companies. So to summarize, I have them trading at a 29% discount. The company's been around for 21 years. They're not really generating positive free cash flow. They're still losing money, but at least their revenue is growing. I rank their free cash flow as 1 out of 10, their revenue 6 out of 10, and their ratio is 3 out of 10. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to become a member, you can click on the link in the description below. Thanks for watching.